It looks like everybody on Wall Street's trying to call a bottom or find one right now for the stock market. It looks like they're all just trying to catch the same falling knife. The Federal Reserve, I actually think that they don't want to raise rates. They just want rates to go up by talking rates up. And the proof of this might be, why haven't they went all the way already? They've certainly had every opportunity to. Jobs report for the month of May comes out tomorrow. This one could actually matter. Gas prices, I heard these are all-time highs adjusted for inflation. I say gas prices are indeed inflation. And housing, the data that we're getting, as I mentioned last week, it's all useless, months old, and you can completely ignore it. Welcome back to This Week in Mortgage, everybody. My name is Sam Battagno, your mortgage broker here at Guaranteed Rate in Beverly Hills, right on Cannon. I hope you're having a great week. Well, Wall Street seems to try to find a bottom every other day, but all that keeps happening is people are catching a falling knife or trying to catch a falling knife. And this is because we've had a risk-off mentality on Wall Street for the first time in a very long time. And the lesson from this is don't fight the markets in either direction. Now, I mentioned some months ago when the markets were at all-time highs that at some point, trees certainly do not grow to the sky and some profit-taking would indeed happen. And we've seen some of the greatest companies in the world, so to speak, down a lot because trees do not grow to the sky. And at some point, anyone who buys stock, I would imagine clearly at some point in their life has the intention of selling it. And it looks like everybody finally found that excuse. Absolutely, cash is still king. Now, when people sell their stocks and they're selling bonds at the same time, which has been happening a lot this week up until today, that is all going into cash. Cash is still king. Cash will remain king. And look for the redeployment of this cash, which will move some market in some direction. And markets right now are certainly, it looks like, basing a little bit. They've been crazy, but they've been a little bit more calm. Now, there's going to be some event or something that makes them pick a direction from here, right around this bear market territory, either up or down. And the best part of this is, I'm no expert in markets, and nobody's an expert in markets, because you don't need them to tell you what you can see right in front of your face. All right, moving on to the Federal Reserve. The action lately on the 10-year Treasury is that rates actually want to go down, and the Federal Reserve does not like this at all. And my belief is they're kind of conflicted right now. I don't know what they're doing or thinking, because it looks like they don't want to raise rates because they haven't. They just want to keep sending these trial balloons out and talking up interest rates, which is a little weird, which actually kind of scares me, because if they were so sure that the only way to get rid of this inflation that we're dealing with right now was to raise rates, why would they take their time to do it? Like I said months ago, before this idea, just rip the Band-Aid off. And the other thing is, how are they really going to raise rates into a consumer that's paying nearly $5 a gallon for gasoline? I will get to that, but I don't think they can keep raising rates, the Federal Reserve. Now, any little break we're getting here on the 10-year, they just keep talking the mortgage rates up by doing that. I think at some point they're going to have to figure out that they need to stop doing that, because the housing market is probably about 25% of our economy, and they don't want it to get sick to come help the patient again. So I'd appreciate it, and I think the economy would in general, if they'd stop talking interest rates up, and if they're actually going to do something, go ahead and do it, because we know it's coming. And then I think the Federal Reserve actually has a new problem that I'll probably talk about in the coming weeks. King dollar. We haven't heard that in a long time. The U.S. dollar is the strongest I believe it's been, almost at a 1-for-1 with the euro. I think the euro's been out for 22, 23 some odd years. And I remember when it was 1 euro equaled $1.70 U.S. Now it's almost a 1-for-1. So Federal Reserve has a new problem now. King dollar is back. The reserve currency of the world, which is actually pegged to oil, is back. And this is really going to hurt U.S. exports. That's probably 10th or 20th on the list of the Federal Reserve's problems is U.S. exports. But it is going to be a problem because the U.S. dollar is the strongest it's been in a long time. So welcome back, King dollar. All right, jobs. Jobs. I love jobs. As I always say, I love jobs. May jobs report coming out tomorrow. This one could actually matter. We've gotten some preliminary numbers, some readings this week. Does not look like it's going to be a strong report. The stock market today was up a bit because it's probably imagining a very weak jobs report tomorrow, which will keep the Federal Reserve from raising these rates. They say they want to raise, but I actually don't believe them anymore. So big May jobs report tomorrow could set the tone. Could see if a weak report comes out, you could see both the bond and the stock markets rally tomorrow in the belief that the Federal Reserve will lay off, which I believe is going to be a necessity, unfortunately, not a want by them. Job openings actually down for the first time by about 500,000 on the last readout. We haven't seen that in some time. To me, the Federal Reserve needs a healthy jobs market to continue raising rates. And if our job openings are down, that's not good. Whether it be whatever reason, if job openings are down, not good. Another thing about jobs, big major companies are actually having hiring freezes as well as laying people off. So it looks like the job market is shifting a little bit, not as robust as it's been, as the economy seems to want to settle down now a little bit after the craziness of the last few years. And this is another thing, along with King Dollar, that the Federal Reserve needs. They do not need a strong currency, and they do not need a faltering jobs market, or that will foil all their plans to indeed raise interest rates right into a squeezed consumer. All right, gas. I saw the stat the other day. Gas is an all-time high adjusted for inflation. I started laughing. Gas is inflation. Everything we do right now is being dictated by the price of gas, energy, food, and just daily stuff. So maybe in the past they could talk about gas in terms of inflation and it being adjusted for inflation. Forget that right now. This is a special time. Gas, energy, food, those are inflation. Take those out. Everything else will settle. Hopefully that happens soon so we can see that. Now, the president and the Federal Reserve chairman did meet at the White House the other day. I do wonder who did blink first. I wonder if the president, what he asked the chairman of the Fed. What's the plan, I guess? Because right now, as I look back, look at things, I don't see their plan. I don't see a path out. I don't see a soft landing, as everyone's talking about. This looks like it could end up being a disaster for the economy if we don't get certain things under control. Seems like some people are asleep at the wheel right now, so everyone's got to wake up. This gas is really hard. Now, I'm in California. Minimum wage here is about $15 an hour. I think they're trying to raise it. There's some parts of the country minimum wage is not high at all, and it needs to go up. But how is somebody going to go pay $4.50 for gas, and they're a minimum wage worker in a state where the minimum is not $15? They're basically going to be paying for their gas and their food to get to and from work every day. That's not sustainable. That's not an economy. I think this gas thing is a big problem, and I hope the president and the Federal Reserve chairman the other day didn't just have a staring contest. Hopefully they weren't waiting for the other one to blink, and hopefully they came up with a sound plan to get us out of this mess, because I don't care who you are or how much money you make, nobody goes to the gas station now and feels good about how much they're paying for gas. This is a real expense, and you can see it add up quicker than it usually does. So no matter how much money you make, more of your disposable income is going towards gas, food, and energy. Not healthy for the economy. And also, another side note, there has to be some price gouging literally going on at the pump, which I wish Washington would get ahead of. They said they were going to do something, but haven't heard a peep. Oil's been this high before. We've had $120 barrel oil a long time ago in this country. We've never had prices like this. So they've got to quit gouging the consumer and be real about this. And my belief is if we deal with energy, gas, the transportation, the food stuff, all other inflation will be transitory because the consumer is tired and is sick of paying for everything through the nose every chance somebody gets to charge them. So deal with energy, everything falls into place. Don't deal with energy, everything's going to fall apart. That's my thought. All right, moving on. Housing. Love housing, my favorite thing. All right, housing. Mortgage rates want to go down. I said that earlier. The Federal Reserve doesn't want them to go down. I don't know why, but mortgage rates do want to go down, and eventually my belief is they will go down because the economy has a lot of question marks out there. As I mentioned, the data is absolutely useless that we're getting for housing right now. It's literally here nor there and doesn't matter. But the market for real estate, a lot of demand, consumer demand is outweighing supply. So we're just back to basic economic theory of supply and demand. This will certainly help and support housing values. And most important, to avoid what happened a decade or so ago, the mortgage market is indeed healthy and liquid. All right, everybody, that's my show. I hope you have a great rest of the week. If you have any questions about your mortgage or anything real estate related, as always, please don't hesitate to reach out to me. Thanks again for watching. Have a great rest of the week.